All right, guys. So it is Sheen Trades with TraderLink, and today we're going to be doing a market overview alongside the commentary that was sent out throughout the day. Once again, I do think these are the most helpful in comparison to just so I guess those classes that we used to run, because a lot of that stuff gets repetitive and it's not really a whole point in teaching it every single day. At a certain point, it just you know what it is, right? So getting started, every morning we send out these reversion levels, easily go in there and mark it on our charts, right? That's exactly what I did. So at a certain point, um, there was a negative Gex wall. The main one was right here, right? So 43 or fuck 53 fuck 5275, that's the level, in 5300, right? Let's start off by saying what I talked about. So Gex flip at 20 5295, 5300. So that was labeled, not labeled. Once again, I didn't think we'd really get up to that point, although it had pretty good interest. I've been baited multiple times in the past by these big extravagant levels at far distances. But one thing to make sure of is like it will become solvent, right? So you'll see later on when I say solvent and when I said it. So de-adjusted flip at 52, 15, and 20. So these are all very, very far off, right? They're all really low. So in my head, I'm obviously been short, what, fucking how many days in a row for the past 2 weeks, only taking shorts. Why? Because at a certain point, you just feel like the market's going to come down. But at the same time, it's also understanding there's a little bit more to it. Like there's a ton of bigger picture items that we don't really talk about all the time, where it's a very bad sign for the market. And they tend to repeat themselves. But that's just like stuff Gio and I look at. But continuing forward with the overall day, right? So off the get-go, I said waiting since market moved heavy overnight to the downside. Once again, I look for shorts at these times. And with that being said, since we've gotten such a big move down, got to stay patient. I don't think I took my first trade until 718. So it's never really an opening trade. I always like giving it some more time to settle down. Right here, I said SMT, not taking anything. Once again, being patient, right? It's still not even 7 a.m. PST, right? So just pointing out indices are diverging pretty hard. NQ has way more strength due to NVIDIA. Obviously, you take a look at NVIDIA. NVIDIA dumped down to 1110, right? And popped right back up to basically its all-time high. So with that being said, it's just this stock is so incredibly strong. It makes it so hard to short, right? Um, but at the same time, we're still winning on shorts. But if Nvidia like this is why I said in the chat, like keep Nvidia on your charts, right? Because the main thing is that Nvidia is so strong. So if it has any turn of event during the day, it's going to be such a big it's going to add to the fuel, right? It's pretty much dumping fuel to the fire. So if we're already looking for shorts, then we're going to start looking for Nvidia to make down ticks. Today they said Nvidia 2300 for now. Bro, that's fucking wild. Marking yesterday's high, low, and close on my chart serving me well every day. Today's high was yesterday's low. I personally don't. Oh yeah, I see that. I don't know. I don't really pay attention to like those types of levels. You'll see it like the more you guys jump into these classes and see the way that I trade. These are the only levels that I have in my chart. Yeah, they can get up to that point, right? But I don't pay close enough attention to it to really be like, hey, these are going to work, right? Because the levels that are given on an intraday basis from me are all based on current data of that day's expiration, right? So even the vol reversion stuff, like it comes out in the morning when we run it. So, but I can definitely see how yesterday's low played out perfectly, pretty much. No gap fill. That was the spot we rejected. So as that SMT happened, hopefully it lets me copy. It usually doesn't let me copy. Can I paste it as an image here? No. So what we will do is this, hopefully. So this was the image that I sent, right? ES or NQ took out this high and ES still didn't take out this high. So on certain situations like this, more specifically, I don't like taking these SMTs. Why? Because this is such a big move back to the upside in comparison to this. So your stops are a lot wider. Like this is this is a little over a 10-point stop on ES. That's a lot. That's a lot. So personally, that's not a trade that I usually would take. So I waited and continued to wait. So back to putting it side by side with the chart and what it looks like, I guess, on the chart with ES and NQ is right here. Right. So once again, that's not a trade I usually like to take. Like this is where it swept that high. And once again, too far of a stop. The risk reward just makes it not there. Right. So if you were to look at it from a risk to reward perspective, and you got in here, your stop is very wide and you're just targeting like low day, right? That's about a little over a 1R. Obviously you would have lost. And maybe if you get more, right, your PT1 would be low day, the next one would be here. But even that second PT or PT2 is only a 1.79 like R to R trade. It's not very great. Right. So skew shifting here, right? Updating everyone. As you can tell on this chart, skew is much steeper to the downside. So it's going to be harder to make that move down. And once skew shifted, I pointed that out immediately. Why? Because then it's a change in sort of like sentiment. I guess that's the best way to really put it. Right. Once you see the skew steepening out on the other side, that means it's going to be harder for the stock to push up, or in this case, SPX to push up. Right. Once again, the analogy is pushing a rock up the hill. Right. So if you're the rock, copy, paste, make this larger. And to reiterate over and over again so that everyone understands. If you're pushing a rock, that's a really shitty color. So if you're pushing a rock up this hill, okay, green's not even a good color to use. Okay, if you're pushing a rock up this hill, wouldn't that be hard to push that rock versus if you're pushing that same rock onto this side? It'd be much easier to push this rock, right, to the downside. So that's the analogy. So once we pointed that out, we basically paid closer attention to finding a potential top in the market, right? When was this sent? This was sent at 6:55, right? So right around here, and obviously the next tick, we got a few down ticks. This was actually a trade that I took, I think. Yeah, 718. Is it right here? No, 718 was right here on a 1 minute time frame. It only looks good on a 1 minute time frame. I'm almost positive. Yeah, I entered at 718 right here, and I believe there was some SMT. Take these on 1 minute time frames. 718. Yeah, okay. 718. So this is where I decided to take the trade. Why did I take it? Because I saw some SMT and we had that skew shift, right? So this high marked at 6:55. And then this high, I guess you could take the 7 o'clock one, whichever one, but there was like pretty equal stacks. So then when NQ took out or ES took out that high, I was like, you know what? I think this is going to be a good entry. That trade lasted all in all 5 minutes. Why? Because we ended up pumping on this next candle and I got stopped out. So I took those from 2.63. My first trim was 3.14 and they hit at highs of like 3.25. And then I decided to put a stop at 3 and luckily I did because we started pumping up. So sorry, pushing the rock example. Do we need to buy a call or a put? Okay, let's put it to perspective. If you're looking for downside, you want the stock to have issues going where? Up. So you want the skew to obviously be steeper on this side, right? So if you're looking for downside and you see that the skew is in your favor, meaning it's harder for the stock for SPX to push up, then obviously you're going to buy a put. Right? If you're looking for longs, then you're going to wait for the skew to actually be steeper to this side. But if that's not the case, then your choice, the odds are higher, the probability that your longs are going to work out in your favor are very slim. Okay, so continuing forward, the next thing I said, betting man or woman today. Nope. Why? Because we're sitting at 52.75 and we have Gex strikes both above and below us. Stay patient. Everyone practice, practice, practice your discipline, right? So why did I send that? I think it ultimately, it just, the thing is when you start to look at Gex and you understand how the curve works, right? A lot of people already know the curve. We talked about it. It looks something like this, right? Where its highest impacts is at the money. So if we're sitting at 52.75 level, I don't know what's going to happen. We have interest above, we have interest below. So why not just wait for one of the interest marks to get hit, right? That's the thought process. Then the next thing is I sent this at 702 negative delta buildup on the footprint, right? So we had that negative delta and that trade was taken at 718. So yet again, it's based upon SMT negative delta. Seemed like a relatively good entry. All right. And I believe we were also at vol reversion 1. Yeah. Around 7.8. No, we were at the neg Gex wall. So that's why I took it. But negative Gex obviously prone to acceleration, and look what happened. Got stopped on it. So we're in a negative environment, higher volatility, lower liquidity, swings will be violent, as you just noticed on that 5-minute candle. So literally the moment I got stopped on that one, dick down. Someone sent that message in earlier, was like, God, look at that 5-minute candle was wild. Yeah. That literally, I hate when that happens. It looked so good for even more downside, and we just so happen to bounce, whether it's at a fair value gap or whatever, VWAP, whatever. You have many reasons that we could have bounced right there. So luckily we hit a trim and put stops in profit. Right. So, and then next thing I noticed is ABS DGX shift as well. 5,300 is now the magnet. Oh, that wick did SMT. Did I miss that? Maybe I just missed it. Ah, there it is. Right here. Took out this, did that. Okay. Good eye, Jade. I didn't even catch that. Very good eye. Also very close to vol reversion 1. When was my next trade? 732. And add in at 742. 742. So right around here. 732 entry right around here when we started getting up to that high. Sorry, what's SMT? It's when one indice takes out a high and the other indice doesn't. So like in this instance, it's used with ES and NQ. Right. So you saw right here, this low got taken out by ES, but that same low did not. And keep in mind, when you're using SMT, it has to be consistent time, like with highs and lows. Like you can't have a low made at fucking 7:30 and the other on NQ, and then you use the low at like 7:45 on ES. No, it has to be, those lows need to be made within the relative same time. Yeah, that's one of our huge, that's one of my strategies that I use in terms of like whether or not to get the fuck out of a position or look for a potential entry off of that. Once again, sent another image of this at 7:45. Why did I send another image of footprint? If you look at this image, hold on, putting in a Zin. Okay. If you look at this image, for every single green candle right here going up has been built up of negative delta. So what does that mean? I saw some people from FU Money asking what that meant. It just means you send this. Yeah, I send this all the time. It gets pushed. If you look at FU Money, look in the TradingLink channel, you'll see this. Like, is here. This chat is pretty much open to everyone, almost positive. Yeah, everyone can see that. Anyways, continuing forward, right? So I sent this in because that's sus. That's sus as fuck, right? People may be thinking, I know so many people that got bagged on longs, whether that be today or that be overnight swings. And everyone was like, you should swing longs, you should swing longs. And be like, I tell them the same thing. I don't feel comfortable swinging longs at these prices. I don't care if it goes up more. It just doesn't make sense. I don't care what strategy you use. If somebody is telling you to swing longs on the S&P 500 or the NASDAQ at these prices, at near all-time highs, when we're what? When we were at all-time highs? No. Fuck no. Sorry. Not gonna be me. I'll take it day by day. I'll look for my shorts continuously on an intraday basis. And I'll get in swings when I see fit, right? For puts, not for calls, but yeah. So this is the 7:45 candle right here, right? Timing wise. So on a 15-minute time frame, let's flip to that. Open up SPX. It just didn't look right. Right? You have three right here. You have so many consistent candles. So next trade I took, and I was happy to take that one, was 742, right? So on this candle, I took entry. Why? Because we have our vol reversion resistance 1 here, and we have 4 candles with consistent negative buildup. So yes, I'm going to take shorts, right? Especially as we're approaching one of our coded resistances. With SMT, does taking out a level equal likely to reverse? How do you determine between 2 calls and puts using SMT? Okay. Let's draw it out. I don't even need to draw it out. It's here. Right. So in this case, if highs get taken out, you look for shorts. Right. Right here, taken out. Right here, not taken out. So what? You look for shorts. Next example. Low right here, low right here. Low gets taken out, low doesn't get taken out. You look for longs. Dude, look, SuperEcon, trust me when I say this, there are a lot of things. Mitchell and Gio are very, very busy. We've even hired a new dev to help us, and even then, that's still like it's not enough like manpower. And they're working more on projects. Like these little things, you should be able to understand what to look for. Yes, alerts would be great, right? I get that. But if it's on your dashboard, you should be able to see it. Depending on where ABS DGEX is, right? Yes, depending on where ABS DGEX is, right? SMT works in every single way, almost like 60-70% of the time, right? But you can use SMT, like you'll see later on. I believe I said there's some SMT here, hit a trim, right? So if I'm in the opposite direction and when I see if I'm in puts and I see SMT, right, where lows get taken out like this on one indice and the other one doesn't, then what do? I hit a trim because why? Why? There's a strong likelihood of a reversal. So okay, continuing forward. Right here. This was the one where it basically called the high of day. Yeah. Oh man, I still hate how we left equal highs here. So gross. Um, anyway. What time frame was that? That was London session. Okay, right here. Ew. Trend line. Right here. That same London session high did not get taken out on ES. More confluence to look for shorts, right? And then we were also fucking right here. And if anyone knows from the previous classes, I made fun of bull flags. And we had been in shorts here. And I was like, bull flag when pop, right? Obviously, it's a joke. And we rugged that shit again. Rug, get fucked. Negative delta on top, get fucked. Bull flag abusers. At this point going forward, I suggest you open up NVIDIA on your charts. Likely this will be a big tell when markets could turn intraday. So today was hard to read. The only real tell for downside direction was the footprint chart all fucking day. Like every single candle, I shit you not, had negative buildup. So with that being said, direction intraday is relatively mixed, but I ain't switching up. Not looking for calls. Remember that. right? Shorties till we get the price. I'm comfortable switching to longs. Only the time will come when you'll see something similar where I only look for longs, like how I am now with shorts, right? So at 8:41, I gave a huge update in what I was watching because it had been a couple of minutes before I was just typing bullshit here, right? But in terms of analysis, relatively flat IV skew, still steeper to the upside. 5,300 isn't out of the picture yet. I personally think that GEX level will be solvent. So once again, as explained earlier, this is when I came to the point where it was like, okay, I've been baited in the past before by very high exposure GEX strikes very far away. So if there's there's so many reasons happening on the charts and on the footprint chart telling us that we should not push up. The IV skew is telling us that we should not push up, right? So with that being said, those are the few things that made me think that 5,300 was going to become a solvent level. We all know my stance. I want lower, but the following needs to happen. 5,300 GEX needs to become solvent. Bonaflip needs to move lower, currently teetering between the 60 level, right? SPY GEX is actually sitting at 528, which I didn't like. And at that time, we were above that. So if I go back to 841 on SPY, right? So around 8. So right here. SPY sitting at oh shit. 845. Like right here. We're sitting at 526.65. So SPY GEX magnet is above us. Right? I don't like that. Because once again, it goes against the thesis of looking for shorts, right? I like it when it lines up with SPX. And it just wasn't the case. Right. So continuing forward, the next thing is QQQ GEX sitting at 458, once again above spot like SPY. So, and then at 8:43, I said also something to take into account is timing. Not sure if we get a move during the lunch hour. It's highly possible, as I've said before. Low volume tends to lead to uptrends, so during lunch hour, it'll likely chop before making that move down. If you're in position, make sure it's a good contract. Right? Everybody here knows that I select in the money contracts, so I don't have to deal with the bullshit of theta and IV dying off during the lunch hour if I want to hold, right? And I said here, you see how I use the dashboard with this commentary. Gex and Vana are mad confusing today with mixed sentiment. So move on to other tools, aka the footprint. So this is also super important, and I want people to pay close attention to this because it's such a big it's a good thing to watch intraday, right? So these candles were at why is that image so small? Let's just copy and paste it. Oh, there we go. So this is 930. This is the 930 candle. And it is the first positive or green candle with actual positive delta, right? Oh, I didn't scroll down. So you see a correlation between NASDAQ and S&P, it seems. Yeah, rough day today for sure. Yes, always paying attention to NASDAQ and S&P, and despite if I'm only trading SPY. Yeah, there's not enough charm today at all. The middle. No, solvent. It means solvent basically means it disappears. That level disappears. You could hold on. Solvent definition. Able to dissolve other substances, having assets in excess of liabilities, able to pay one's debts, but solvent in terms of like it'll disappear. Anyways, continuing forward, right? That first candle was at 930. This is that 915 candle, right? To the upside. This green candle right here had a positive delta. And look at that. Every other green candle going on the 15-minute right here, and right here carried what? Carried negative fucking delta, right? Other than this one right here. What did this one carry? It carried positive delta. Look what happened. We moved up. This is why the footprint chart is so important and people don't like it shows you who is in control. And in the case of all these other green oh, why is this one back to red? Oh, that was text. Hold on. Right. This green arrow, fucking this candle had negative delta or had positive delta. And we moved up afterwards. All these other ones didn't. They carried negative delta. So we couldn't make that move up until this one. The sellers took control. I mean, the buyers finally took control on that candle and moved the stock up. Right. Where do you see delta? Delta is shown on our footprint chart right here. This is our footprint chart. This is a really shitty time frame. Well, it's not capturing everything right now, but and it shows delta on diverging indices. So if it's or diverging candlesticks. So if this is a green candle, but it carried negative delta, it'll show the negative delta. There's a red candle, it carried negative delta, so it doesn't show up the diverging delta. This is a green can or a red candle carrying positive delta, so it shows the diverging candle or delta, I guess. So this one, sellers are actually in control of a green candle, buyers are actually in control of a red candle. So that's essentially how we calculate it or how it works. Would we be able to show the delta? It personally, it just crowds the chart. I've seen it with that. My personal opinion, Gio's personal opinion, Mitchell's personal opinion, it just overcrowds the chart. And to us, it's just not important because it doesn't show you what you really need to see. Remember, right? Everything we show you guys on the dashboard is stuff that we think you need to see. Seeing the delta on a candle that it just is a bearish candle, like a bearish red candle, and the sellers are in control of that candle. Why do you need to know? Like it's not important in my opinion. You won't be able to catch things like this. You won't be able to catch if all the deltas are showing up at the top. You won't be able to see the one that I guess is positive like clearly, if you know what I mean. So once we got that move up on that positive delta candle, right? That was pretty much the one to make us move up. So eventually that the red candle controlled by buyer will turn green, right? No. That's not how it works. It just that candle closes, but even if that candle closes bearish, right? People who are candlestick traders or quote unquote price action traders, and they see that candlestick, then they're like, oh, that's a bit like you could have a bearish engulfing candle, but that bearish engulfing could still have positive delta. Does that make sense? Yeah, so that's essentially why we show the diverging deltas, right? And that's why it's like candlesticks are sometimes very, very fake. But so that's another reason why we base it upon that. So at 1048, 5300 became solvent, and at 1110, this was a huge change in GEX, and I pointed it out. Huge change in DGEX could accelerate through these levels. Be careful as this hasn't picked direction still. It seems still eyes on footprint here because the 15 candle has positive delta. So this was sent at 1110. Where's 1110? Right here. So this candle right here. Wait, 15. This one right here. So this one had positive delta right here. But so hold on, cracking my back. Okay. So huge change in DGEX, eyes on footprint. And then you'll see right here, I immediately say, I say eyes on footprint here because that 15-minute candle has positive delta. Then I flipped. The moment it changes, I'm telling people, right? I'm updating you guys. Less than 3 minutes, that 15-minute candle flipped negative. That the delta on the 15-minute candle flipped negative, right? So this actually this candle was initially green, obviously, because this is the this is the opening candle. And right here, it was green. Then as we started, and I think it was like right around here, this candle had positive delta. Then we went lower, and then it came back up, and then that positive delta still disappeared, and that delta flipped negative. And then I gave that play on VC, where we took entry somewhere around here as we approached this area. I said, what did I say? 528 puts. Do we need to use 5-minute candles or 1-minute candles? I use the 15. So the first like 30 minutes, I'm watching the 5-minute candles. Then the rest of the day, I pretty much flip to a 15-minute for footprint. So only you can see delta on footprints. Yes. Footprint charts are the only way to see the deltas of each candle. But does that make sense? These are the little changes that that I pay close attention to, right? That candle was green or was red initially with positive delta, then it flipped negative. Guess what? You can literally see those buyers losing control on that candle. And the next candle, we dip down. We dip again, right? And then we dip again. And then we continuously dip, right? First PT was right here, and we took it off. Right, so the signal from VC was given out. I forget the exact time, but the play was 1.27 to 1.8 on in the money spy contracts. I don't know that percentage. I was a little hesitant on that play because these wicks were a little bit sus. But after I saw this one, I was like, okay, this is pretty good. And the contracts at the moment were actually moving like ass. Like they were stuck at 1.5. For anyone who was in VC with me in Geo, like you remember, those those contracts went like 10%, 15%. I was like, dude, what the fuck is this? Even though we were getting a pretty clean move down, right? But it is what it is. And we ultimately still caught that play. I think I got stopped out right here. We hit 1.8 trims down here, stopped at 1.6 on this candle here. This wasn't the move down that I wanted. This was the move down that I was waiting for all fucking day. This one right here. Like I think in the regular trading chat, I was saying like main trade chat, I was like, I want a fucking low of day. But we got it after ours, which is really annoying. Still overall green on the day. Went like 5 for 5 on every trade, or every trade was green today. So with that being said, questions, guys, questions, hit me with them. And for those who of you who are on or from Zach Morris's Discord, FU Money, we are running. Um, we have our giveaway. If you guys missed it, it's a weekly giveaway. It's nothing crazy. What the fuck is it? What the fuck? Anyone who's interested in it. Hey, didn't Zach coin rug? I'm still a holder, full position. Don't give a fuck. That thing's going back up. Zach, okay, put it to perspective. It may have gone down, but Zach himself didn't sell a single fucking coin. Like the main marketer didn't sell a single coin, man. I literally, if he's not selling and he has like a million plus on the line, why the fuck would I sell if I only have like 20, 30 grand on the line? Like I'm not worried about it. If it goes to zero, it goes to zero. Look, that's fine. That's fine with me. But there's no way that it doesn't go back up, especially with him not selling and even the other people not selling. The creators not selling. Or the devs? Devs, that's what they're called, devs. Yeah, hell excited for more Trader Link. When do you guys think live reversion levels will come out? Hopefully soon. We're working on a server, or Mitchell's been working on a server migration because we got our own servers instead of using AWS. So he's been working like hard on that because the moment we get our own servers up and running, then our costs reduce like a really good amount. Close to like 5, 6 grand a month will be saved from the cost. Like obviously servers were super expensive and they can in and of itself, but to save 5, 6, potentially 5 grand every month is huge. But those servers were fucking expensive, bro. We got two. Anyway, to any way to have anticipated the end of day dump based on the data toward end of day. Let's take a look at Liquidos's channel. Let's go into that. Liquidos. Towards the end of the day. We got that move up right here. So at this top. I want 4K. There we go. Hmm. Personally, no. At least for me, I can't see it. Flip is still at 70, 75. So the gamma profile is super tight. Yeah. Like the only thing I can think of is like you could if basically any direction we run away from 75, then you look to short down to it, right? That's pretty much all I can really think of. Yeah, AWS pricing is cheeks. Yeah, the only real reason I can think of it is like, but even then it's like the most I would have taken is like 75 or like the most recent lows, like at 70. Split Vana does not work still. Yeah, today was a tough day to read. Like for those who know, like I've been on point for what almost 2 weeks now. This is the first day where I was actually hesitating on the data. I was like, this doesn't look too right. And you see, and whoever joined on VC definitely saw that. So it's like it was a tough day. Yeah. Liquidus pointed that out in the morning. The IV skew just looked like ass earlier on a channel on Discord works. Oh yeah. Forgot we have those. Wait, when was this? What time was this? 12:41. What am I looking for? Oh, I guess you can see those. That's like super small though. So it's like I don't want to say like, oh, that's why we went down, and then everyone's looking at end of day for those tiny bars. You know, I don't want to give out like bad information or bad things to look for. Not really bad, but like things that don't work out all too often. We have GDP, unemployment, and PC data coming out between tomorrow and Friday. Damn, we have a lot of shit coming out. Oh, we have GDP tomorrow at 5:30, unemployment at 5:30, 1 hour before market. Bro, that's gonna dump the market on God. One of those overnight movers again. Then we're gonna get I guarantee you we're gonna get something like this tomorrow. Another range day tomorrow. If anyone's wondering, is what he's talking about. Thursday. This is all in PST. So add 3 hours, 1 hour before market opens, 30 minutes into market open. Then we have fucking Williams speaking at 9:05 a.m. So yeah, Forex Factory is the best. I like Forex Factory. Their calendar's clean. Yeah, tomorrow is gonna be like an SMT day. Pay attention to Delta, or footprint Delta. Like even on a chop day, we won today. Like pretty much everybody won today. That was in TraderLink with us. So I don't know a single person. Like someone fucking hit. Also, that butterfly. This motherfucker hit a cracked butterfly, bro. 745% cracked butterfly at the end. Damn, these people. Somebody like people are. Me and Jew were talking about it. Like, bro, like. Why the fuck? I wait all day. I scalp 20, 30%. This guy waits all day, gets 745% off a butterfly. Cracked. But it is what it is. Not my style. I don't trust butterflies enough. Well, not that I don't trust butterflies. I don't trust the fucking market to go in my favor at the close. Keep in mind, guys, remember, I don't trade power hour. Yeah, butterflies are definitely easy when it's like one big bar of gamma and only one big bar. Or like you have your defined range. But yeah, I don't trade the power hour almost ever. I can't get myself to do it. That's an hour of risk that I don't fucking need. Trade them at, you don't, I know, but I don't know. I don't know. Butterflies just ain't my thing. And we all know fucking, come on, Liquidos. High percentage trades are not my thing either. I'll take my 20 to 30% winners. But questions, guys. If there are no more questions, I'm gonna end it here. Tomorrow we have another Vana class. We're gonna go over it, but most likely not gonna run an overview because teaching Vana takes some time. Low risk, mid reward trades. A 7 footer, I mean, they're low risk because you put in very little amounts of money for like pretty decent return. I can see it. Yeah. If there are no more questions, guys, I'm gonna close it off here. Yeah, the runners will always run. Like that's why I always stress like, okay, make sure you put your fucking stops at break even after you hit your trims. And occasionally they will hit. I promise you, they will hit. You're not here to hit home run trades. Like I know some people uh, who always look for home run trades. Like 1.0 to like 5, I can't do that, like personally. But it's just look, if it works out for you, great. But it's not every day people are hitting like 400%, 500% trades. That's just not how it works, right? You're gonna win more often. Now, I'm not talking about Fatty, man. Fatty, like those are end of day trades. Like those are most of the time those are like end of day trades. Um, I'm more so talking about somebody else in specific. I've been telling him like you'll know who I okay, the moment I bring this up, you'll know. Ah, there it is. I've talked to him so many times of like don't look for these home run trades, like buying SPX contracts at 1.0 versus SPY at 1.0. Like, yeah, SPX can run to 5 to 10 maybe, but it doesn't happen every day. You're better off consistently hitting small winners, like hitting singles, doubles every time, and triples rather than home runs. But hey, that's his style. That's what he likes. It's up to him. Yeah, it's easier to continue trading when you continue fucking winning. Like you just have to consistently just win, 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 build up your confidence. And don't when you start getting too confident, that's when it gets dangerous. That's what I say. You need to maintain the same size on every single trade. Yeah, credit spreads are great. Even a small loss is a win. Yeah, small losses are great, right? Why do you think I've been buying in the money contracts? Max Payne, 50%. If I size the same, so be it. On every single trade, there's like a 10% to 20% chance I ever experience Max Payne trading SPY in the money contracts, right? And I already know if I were to buy out the money and bag hold the same way I bag hold in the money contracts, and you can ask Liquidos, I love bag holding. So I found my balance of like what like the contracts I'm okay bag holding because you can't experience fucking minus 90% almost ever. Not ever, not almost ever, but like 10% chance you experience like max loss, 20% chance. You can even go to TOS, look at the options chain. There's a probability the contract, a probability of in the money on the options chain. I hold the position for zero, right? So even if I'm sizing within, like if I'm doing, I take the normal size that I would go into on an ODTE back then. Yeah, the probability is strictly just based on the delta, which is awesome. I like picking contracts with a point, with right around a 0.8 delta. That's my go-to. For every single dollar that SPY moves, I make 80 bucks a contract. And if I have 10, if I have 100, that's 8,000 or $800. So, but yeah, how much draw? So I usually with this account, my day trading account, I've been sizing with just 10 contracts. And yesterday on this account, I did 1,700. Today I did 750. So it's doable. And look, I'm not sizing like a crazy amount like I used to. Liquidos knows like I used to go fucking retarded with one of our other boys, Rumple. Um, I can't afford those losses because at a certain point they just got way too big. Yeah, you can ask Liquidos and me and Rumple would lose money for sport like all of quarter four last year and quarter one this year. It was a fucking sport, bro. We're losing like 20, 30 grand a day. Yeah, I strictly just like with this small account that I've been running, basically it started with 7 grand to 14.8 right now, practically 15 grand in 2 weeks, just running in the money contracts. The 2 weeks that we've, or basically almost the 2 weeks that we've had with the TL analysis channel, that's as long as I've used in the money contracts for this account, and it's doubled. 7K to 14.8, it's doubled just using in the money contracts. And once again, trim, break even, stop. Occasionally those home runs will hit and you'll get those bigger days on these types of accounts. And it works, right? I've been trading SPY and recently I've been playing SPX. I've noticed it moves so much different than SPY. Any advice how I should trade versus SPY? Size for zero and fucking hold your balls if you have balls. Like SPX moves so fucking fast, bro. Like it is what it is. Like contract, think about it like this: a contract you buy on SPX for 1.0 and a SPY contract you buy at 1.0, SPY will probably hit 1.5 and that SPX contract will probably hit fucking 3.0. So it moves like 3 times faster than SPY. So it just some things to take into consideration when trading SPX. Like, and think about it in the same way. A SPY contract can go from 1.2 to 1.0. That SPX contract probably goes from 3.0 to 1. So you'll lose just as fast as you win. That's why it's like trading SPY has been much easier on my mental. Like I haven't had this little amount of stress trading in a very long time, just trading SPY in the money. Oh, I figured out why. So QQQ gamma sometimes looks a little wonky. You have to set, like, for whatever reason, pick the date. I don't know why, but pick the date. Like, make sure you select the date. Yeah, SPY, look, SPY's cheaper. You won't make as much as you will on SPX. I can guarantee you that. I can fucking guarantee you that. My biggest days on SPX, um, if I were to put that same amount of money into SPY, it wouldn't have made the same. Nowhere near the same. Right. Look, I'm not the trader who hits big wins. I never have been. Ever since the beginning of Apex, I've never been a big winner, a big percent winner trader, right? And I used to look for them so hard. I like 3 years ago, I used to look for them so hard. I'm like, damn, dude, like I've been dying for a big win. Like all I want is a big win. One big win will change it for me. No, there's so little stress in trading in the money SPY contracts. You will not believe like how easy it is. You ever trade XSP? Occasionally, not often. I rather just trade SPY. I like the way SPY contracts move better. They also have better liquidity. People like you'll see like people like a lot of people I know trade out the money, which is fine. That's how majority of people trade options out the money, right? But I just don't want the stress anymore. Like I have gray hairs on my fucking beard, and I'm only 23. Like I'm good. I don't want that stress. So I just trade in the money. You can calculate your max loss. It's just whenever your strike price goes out the money, you can calculate minus 50%. Just take your contract, take the strike price, minus what you paid for it, times 0.5, subtract it from the strike price you picked. Yeah, I know. Grandpa, yep. So I'm just sick and tired of like the stress, and I've been more accurate with analysis. I've been winning. I haven't had a red trade in 2 weeks. So yeah, exactly. The intrinsic value is where you're gonna win. Like pretty much like my ideal entry for SPY is usually when you enter in the money contracts, you're gonna be at your break even price is about 10% pretty much anytime you minus 10%. And that's end of day break even. So like how do I put it? Let's look at SPY really quick. So let's say we're sitting at 524.12 right now. Let's say tomorrow I'm looking at 526 puts, right? 526 puts. How much do they cost? Let's just take a live example. This is how I calculate it. Yeah, theta broke my heart way too many times. So I just got sick of it, so I made my own change. Wait, these are today's expo. Tomorrow expo. We'll do a 520. We'll do 527. Let's say select the 527. Wait, are these that cheap? There's no fucking way, right? 527. Why are these so cheap? Okay, that doesn't make any sense. Oh, it's because we moved. These are based on 15 minutes after close. Okay, well, 527, what is this at? 15 minutes after close, right here, 525. Hold on, let me math. 527 minus 525.4, 1.6, 1.6. So we'll take current price plus 524.12. So we'll take 526 calls. They'll probably, or puts, and they'll probably be around 2. 526. No, these will be at like 2.5. Or no, these are gonna be 3. No, they're okay. Okay, they'll be like 1.8. Okay. So let's say they're 1.8. No, we'll say they're 2. Let's say they're 2, and we enter right now, right? So your break even is going to be 524. Actually, let's go as far as say they're 2.2. Make it a little more realistic, right? So if you take 526 puts in the money and you pay 2.2 for it, right? This level right here, 526, right? You're taking the 526 put. Let me 526 put at 2.2, right? This is what we have. This is what we take, or what we're taking in this instance. So this 526 level is going to be your max pain slash max loss. This price right here, how do you get it? You take the strike price that you selected, strike price minus cost basis. So in this case, 526 minus 2.2 equals 523.8, right? That is your break-even level. EOD break-even. Let's make that clear. That's your end of day break-even, right? So this level is going to be EOD break-even price, right? And that's essentially how you calculate it. How do you get in between there? Or how do you get the minus 50%? It's as easy as taking your cost basis 2.2 times 0.5 is 1.1. Then you take 526 minus 1.1. 526 minus 1.1 is 524.9. 524.9. Coordinates, boop, boop. And this is going to be minus 50% at EOD. Right? Now you have your defined risk. Right? What are the odds that you push up to 526? Relatively low. So you're rarely going to experience max pain. You probably have a 10 to 20% chance that you hit max pain. Right? It's not, it just makes more sense, right? And it's as easy as calculating, okay, if my price target is 522, right? Let's say I'm targeting 522 and I take the 526 puts, right? If 522 is your PT price target, yeah, max pain is 100% loss. And you bought in at 2.2 and your price target is 522, how do you calculate your exit, or where are you going to put your limit order? It's as easy as taking your max pain, your strike price that you picked, right? Your strike price minus your price target. 526 minus 522 is 4. All you got to do is, if your target is 522, you set your limit at 4. And I guarantee you they'll hit. Why? Because already that puts the intrinsic value at end of day if we close at 522 at 4.0. Right? So if you have a price target, especially like, okay, if I'm basing this off of this, right? Okay, my price target is going to be 523.08. And we enter right here, right? What I would do is I would take 526 minus 523.08, and I get 2.92. That means you can set your limit at 2.92, and guess what? You'll probably hit it when you hit your price target, right? If my price targets are these lows, then I know what my contract will be at in terms of just strictly intrinsic value. Right? You can even calculate minus 10%. It's very easy, guys. It's the same way you took minus 50%. You just do your 2.2, your entry price, right? Your cost basis multiplied by 0.1, right? Then you take that 0.1 answer, which is 2.2 minus now 0.22. So 2.2 minus 0.22 and 1.98, right? So you take your strike price minus 1.98, and that's minus 10%. So 220 or 526 minus 1.98, 524.02. 524.02 right here. Minus 10%. Right? That's minus 10% on your contracts at end of day if we close there. So this is ideal in the sense of like, so when I'm entering intraday, right? All these calculations are end of day calculations. When I'm entering now, usually fair value for for the premium if in the money at a 0.8 delta is going to be, anytime you enter, your end of day calculation is probably going to be minus 10%, right? You're going to enter around minus 10%, minus 15% from your break even, that is. And that is to me perfectly fine. That's usually what I like to enter around. I don't like entering around fucking minus 20%. Why? Because that means contracts are juiced. Contracts are more expensive than they should be. Do I do this calculation on a daily basis? Not a fucking chance. I have max pain and break even mark. That's it. All this extra shit, not necessary. But if I see IVs high or I know we have an event, then I'll calculate the percentage of where I'm entering. But with that being said, guys, we've been on for pretty much over an hour. So hopefully some of this made sense. Hopefully it helps you. I hope I can sway you if you've been going through like bag holding, dying to theta to try in the money contracts instead. I love it. You won't, once again, you won't get crazy high percentages, but you will probably start winning more consistently. Like if you notice your analysis is on point, but your contracts just don't work out well, or you lose because your contract selection, I suggest to you to give in the money contracts a try. They're cheap. You can't beat it. So with that being said, thank you for tuning in. If you haven't, if you're new to this or you haven't tried out the TraderLink dashboard, go to our Twitter and look on the timeline for that giveaway for Memorial Day. I'll be announcing the winners on Friday after market closes. So like and retweet it and follow the account, and that's really all you have to do. So thank you guys for tuning in. And as always, keep moving forward. Everyone have a great rest of your guys' evening.